the inflation is under control, the fiscal deficit is within the budgeted norms, and perhaps the domestic consumption is giving us the GDP growth as well. So from that perspective, if you ask, that's a very, very different thing, and people today talk about India in a great way as to where all others are struggling. Perhaps we are making a good headway in terms of economic development. Banking sector per se is the fulcrum around which all the developments can actually prosper. And I think even from that perspective, if you really look at, the banking sector has also kept up the pace. Means if you look at, usually when you see a rising interest rate scenario, the delinquencies go up or the demand for the loans go down. Here, in spite of a consistent increase in the interest rates over last 15 months, we haven't seen much of a blip on the either on the delinquencies or in terms of the demand for the loan. There could be various reasons for that. I'm not getting into the details part of it, but at this stage, perhaps we are in the I would call it as a sweet spot for India and the banking sector in particular. We also observe that as the interest rates starts rising, perhaps the gap between the saving interest that you earn on your savings deposit versus the interest that you can earn on the alternate investment opportunities, mainly liquid fund, was widening. People were thinking what to do, and that's where perhaps the challenge for the low cost and stable deposits within the banking sector, growth rates started showing up. And this is the opportunity which we saw, and this is a situation that we saw and perhaps thought about coming up with a product which will solve both the issues that the customer has. Because as the interest rates goes up, perhaps FDs become the darling of the customers, but obviously with that you have the inflexibility of getting the money when you need. At the same time, even you have the flexibility of doing the premature withdrawal, but it hurts you in terms of the penalties that are levied. We at Kotak have always believed in coming forward with the customer-centric products and make sure that customer can use it easily through our digital modes. And keeping these two factors in mind, what we analyze based on certain customer surveys that we did, the problems or the customer issues that we had, and here we have come up with a product which in our mind will change the paradigm of savings account in the country. Let me ask my colleague Rohit to take you through the specifics of the product per se, and then we can discuss any questions and the explanations that you want us to give. Thank you.
Thank you, Virat. Hi guys, I'm very excited to talk about the new product launch that we're doing today. It's called the Active Money, and I will run you through a presentation which tells you about the rationale as to why we've kind of done that. Here's the presentation.
Yeah, that's great.
Okay, no worries, we're done. Can you guys see the presentation?
No. We have to go back to Zoom.
Share screen.
Yeah, just hit escape.
I've done it.
We have people online as well, so you need to share it online. So you can press escape. Go to Zoom.
Yeah, I'll do it.
Yeah. Share screen. The one below.
You know?
Yeah.
Okay, good. So what we stated as an ambition or the key vision at Kotak is to become a more consumer-centric bank driven by technology. And in the ambition of driving consumer centricity of the bank, we really try to understand how can we really solve the needs of savers in this country. And when we were looking at that data point, we realized that about 62 lakh crores of the consumers' monies is actually lying across savings accounts. When you look at the total deposits, that's about 35% of the total deposits which is there across savings accounts, term deposits, and current accounts. And that's a sizable amount. And we all know that savings accounts actually earn about 3.5%. And in a high interest rate scenario as we are today, FDs earn significantly higher interest. And then we were wondering that why would consumers keep the money in low yielding savings accounts? And if we can do something to actually provide higher interest rates in the savings account, how would that be? And then we understood that there were two big reasons why consumers don't park all their monies into fixed deposits. The whole idea of liquidity, savings. The reason why you keep money in a savings account is that when you need the money for any expense, any emergency, you should be able to withdraw the money at the same time. But if you were to have that entire money lying in fixed deposits, and you were to break the fixed deposit before the period, you actually incur a breakage penalty. So that is the second reason. So it's all about liquidity, and it's about the fear of breaking an FD before its duration ends, and therefore incurring the pre-breaking penalty on that. And that's the reason why consumers keep 35% of the money which is lying with them in savings accounts, which actually yield significantly lower interest rates. So we want to solve this problem and give the consumers the opportunity to earn higher interest rates without losing the liquidity of a savings account and without incurring the penalty of actually breaking a fixed deposit early. And that's where, to change this paradigm of the saving culture in the country, to actually benefit the consumers by getting them higher interest rates in the savings accounts, we're launching this new product called Active Money. What is the Active Money? It's very simple. It is a unique product which actually gives you FD-like interest into your savings accounts. So how does it really work is that, if you have, so if you just go to the next slide, we'll come back to this one. So how does it work? So if you, for example, have, a savings account with a minimum account balance requirement of 25,000 rupees. And let's just say you have a lakh in your savings account. So the difference between the minimum balance required and the money that you have in your savings account will actually move into a 6 months FD in multiples of 10,000 rupees. So for example, in this case that you see on the screen, if the minimum account balance requirement is 25,000 and you got 1 lakh rupees in your account, so 70,000 rupees will actually move from your savings account into this fixed deposit for a period of 6 months. And assuming you have a check which comes to your account for let's just say 30,000 rupees, then the 30,000 rupees will move from that 6 months fixed deposit back into your savings account, and the remaining amount of 40,000 rupees will continue to earn the high interest. The unique point is the fact that when you break this FD, you will not incur any penalty. So effectively the FD balance and the savings account balance is treated as one balance together, and it's just that for the period that it stays in the FD, you earn the FD interest, but when you need that money, it just comes back into your savings account automatically without you having to do anything, and therefore it provides you the liquidity. So that's really the way. So that's really the way this product works, and it solves for the two problems I spoke about. First is, can I provide liquidity in a fixed deposit, and through this account I can actually give her the higher interest of a fixed deposit but give her the liquidity of a savings account. At the same time, if she has to break a fixed deposit and bring the money back into savings account, I charge no penalty on that. So this is a unique product where we're giving her the opportunity of earning FD-like interest while providing the liquidity of a savings account. And at this stage, we're actually at the highest interest rates at 6 months level at about 6-7%. So that's what we are providing to her, 7% interest, up to 7% interest in an FD with the savings liquidity in the Active Money product. So that's really the product construct. I think the big shift, the big vision that we really have is that the 62 lakh crores which is lying with consumers in savings accounts, we want to get them the opportunity of earning higher interest on that money in this high inflationary scenario by actually trying to move all that money into a product like Active Money. So that's really the vision that we have, benefit consumers with what they want, and attract low cost deposits into the bank using the Active Money as a product. So that's what we wanted to say. Anyone has any questions? Yes.
So sure, this can help customers better manage their liquidity. Have you mapped out how this impacts Kotak's own liquidity planning, given the sweep in, sweep out that happens constantly? Does it have a meaningful impact on how the bank thinks about its own liquidity management?
Yeah, I'll tell you. You see, in terms of, we have a robust model on liquidity management of the bank.
Sure.
The way in which we are treating this is no different from a normal 6-month TD that we would have got. Okay, so that makes the life little easier, and hence you are acting more on the conservative side when you plan it in this form.
So you basically treat it as a 6-month FD right from the get-go.
Yeah.
Without accounting for the sweep outs that could happen.
We know what percentage can move out.
Right.
Okay, so there are models which we know at the back end which will work and say that okay, if there is X balance, then X percent, Y percentage could be what we'll have to provide for that customer can withdraw.
Has this been piloted to some customers to derive those models, or how did you arrive at those?
No, you see, in terms of, we today do have this kind of a product. Okay, and so there is a history behind that, and we have a complete data to back that.
So we're looking at both historical data and what we believe could be the incremental that we could get, depending on when you communicate this to consumers, there will be some incrementality that you'll get. So we've taken both into consideration and come up with ratios internally.
And the interest rate you have said up to 7%,
That's
and it will be on the FD of minimum 6 months, 180 days.
That's right.
So it can be below 7% also, and then the minimum amount which is required. For example, the example you shared of 25,000. For that 25,000, what would be the interest rate?
25,000 is the savings account, so it will earn the savings interest. Okay. On the money which you have moved into the sweep, okay, if it remains for 180 days, what it is designed for, you will get 7%.
Minimum 180 days.
Minimum. If I'm not saying minimum, it is theoretically maximum, because at 180 days this will get back and flow back into the FDs. Okay.
Into
the question
savings
is
account.
the money will flow into the savings account, and it will again go back into, at the day end, into your new FD. So it's a 180-day product. Okay, at 180 day it has got liquidated. To answer your question in the sense that if you want to use it, that's a flexibility that we offer. For the number of days it is remaining in the FD, you will get equivalent interest on that. So if it remains, if it remains for 3 months, then there is a 3-month interest on FD, whatever is payable, that will be paid.
At the rate of 7%.
Not at 7%. At the what is applicable for 3 months. Yeah.
So are you sort of now essentially making current accounts an interest earning product? Because and how does it affect Kotak? Because those are low, those are zero cost accounts.
Correct.
So if you're giving interest rate on that, how does it?
Yeah. So it helps us from the fact that more customers will bank with us, and with this you will have more low cost deposits also coming in to compensate for this higher interest rate that we might have to pay to the customers who use this. Okay. And for a current account customer, essentially it is the usual churn that he has in his account. So from that perspective, it suits him that for whatever period he is not using the money, he will at least earn some interest on that.
And these balances that for current, say 50,000 rupees, that can be changed, or that's fixed? Like it has to be at least 50.
Look, it can go up. Okay, depending on what you want. Look, there are different products that we will eventually come up with. Okay, to make just now the life simple, we have this. But there are, we have different savings and current account products. So linked to product, there are thresholds linked to that particular products.
Sorry to follow up, just a quick follow up. In your conversations with customers,
Yes.
how much importance do they put to the interest that they earn in their savings account? Anecdotally, going off my own experience, I barely even notice the interest coming in because it's a very small thing. Is this something customers have been highlighting to you, that they feel unhappy with their savings accounts interests? What is their outlook on it?
So look, their behavior has shown us that. Okay, when we never check, we never go and do the mathematics saying that did I get the promised percentage on savings interest rate or
Yeah,
not.
yeah.
But the behavior is that when the interest rate gap between the savings account and the liquid has widened, you see many people moving money into
Sure,
the
yeah, that's
liquid.
been going on
So,
for-
so from that perspective, he is conscious about what interest that he is earning.
Sure.
Okay, he may not be measuring it, or he may not be really worried about it in
Yeah,
that sense. But the
yeah.
behavior shows a trend whereby he is moving money into the products which earn him higher returns.
So there's enough pull for a customer. To
That's right.
And you would assume that pull continues even after we see somewhat softer rates, maybe next year sometime.
Look, it will.
Okay.
It will. The degree can differ.
Hmm.
Okay, and that's why means you see currently you are at the peak of the
Yeah.
interest rate cycle, so
Yeah.
it makes sense to do it at this
The peak
stage.
of it all.
That's all.
And I think to build to what Virat is saying, what they say versus what they do is where you have to see this.
Okay.
You know, so there has been a movement of funds from savings accounts
Yeah.
into high yielding assets like fixed deposits, liquid funds, and then the reason for that is what Virat explained, is the differential. So people understand that fixed deposits give high interest.
Right.
They don't calculate in their mind that, oh, I'm getting 3.5 and I'm getting 7 there. The difference is 3.5%. It is just that they know that it's a higher interest. But at the same time, the savers then lose the opportunity that they keep their money in the need for emergencies,
Right, yeah.
and they can't earn that higher interest. So we want to give them that opportunity.
Yeah,
so
that liquidity management.
yeah.
Look, just now means many a times the consumers feel that I don't need this money for maybe 6 months, 7 months, but I don't know if urgency comes in what will happen. So rather he was not putting it into an FD because it's a fixed thing, or if he
Yeah.
breaks there is a penalty.
Yeah.
Through this product perhaps he gets away out of that problem that he has. So he can put in case if it doesn't happen in 6 months, in 5 months, the money is available for him to
Yeah, however
really
they choose
use
to
it.
use it.
Yeah.
So you take away that pain from the consumer. The consumer doesn't need to think, what happens if I need this money. So he treats this account like a savings account, but he gets the interest of an FD. So you just make it very, very simple for the consumer, that let the movement between savings account and fixed deposit happen automatically without you having to worry that my money will get blocked for 6 months or blocked for 1 year. The money is with you when you need it, and still it will earn higher interest than what it would have earned
On the
otherwise.
same.
But sir, some sort of consent would be required. Na?
Yes.
The click once you need to click,
Yeah.
it will not have.
No, this is customer has to opt for it.
Yeah.
Customer has to opt for it, and even in our digital journey, yes, he will have to tick it and say that yes, I am wanting to opt for this product. It is not
For every time.
not every
The
time.
amount
No,
also
no, no,
you
no.
need to choose.
You have to opt for whether you want to use the active money or not only once.
Only one.
Okay. Once you have chosen that, your threshold is fixed, that anything above 25,000 will be swept in. It will happen automatically.
So in out, in out, in out.
Automatically. Yeah. Unless you switch it off, saying that now I don't need this active money to be exercised, till that time it will continue. But the control is completely in customer's hand.
And we made our, in our desire to be a more technology driven brand, so we are doing DIY journeys. So consumer doesn't, there are various ways in which the consumer can open this. You can go, if you're an existing consumer, you can go on your mobile app and you can click it and automatically it will get activated. If you're a new to bank consumer, if you want to open a new account, you can come to the bank website, or you can come to the bank app, open an account. When you open an account, you can actually activate the active money as a part of that. And once it gets activated, then you have a minimum balance requirement. The moment your balance goes above the threshold, it will automatically move out, and then it just manages automatically. So we're making it very digital. We're making it very user friendly. He or she doesn't need to go to the branch to activate it. That's not the only way. You can kind of do it through the mobile app. You can do it by calling the call center. There is an SMS that you can WhatsApp, and you can open it with that. Or, of course, the branch is there. If you want to come back to the branch, you can do that.
Just when you say that customer has to opt for the active money.
Yes.
Once that he has to take that.
Yes.
But after that, the time period for the FD, that is about 25,000. So how he can decide that, or the bank will decide?
No. Let us take this example. 25,000 is the minimum that he needs. Okay. So in the packets of 10,000. So every day end means anything about 25,000 and greater in the packets of 10,000 will be swept into the TD, active money.
So by the default minimum period will be 180 days.
180 days.
If I want to increase that period,
No,
Okay.
no. So this active money is a 180-day product.
So to build on an example, sorry, I'll come to it, I think. So let's say you have 50,000 into your account. So 25,000 is the threshold. So 20,000 will go into fixed deposit, active money, and the 30,000 will remain there. Let's say you don't need it, you don't use that 20,000 which is lying in the active money. Next, you get a salary at the end of the month. Let's say your salary is 70,000 rupees. So now 70,000 will also go into the active money as the next, fixed deposit. So that's how your those fixed deposits will keep on getting built. And when you need that money, or you a check, let's say you buy something and there's a check of 20,000 rupees, then it will come back from one of those FDs into your savings account, and the remaining money will keep on earning higher interest. So it's all automatic. You don't have to. You just decide the threshold is there, and after that, anything over the threshold will automatically go. When you need something back into your savings account because of a check hitting your account, it will automatically come.
so the customer will do normal transactions.
Yes.
The bank
Yes.
will take care of
The back end.
Yeah, you
the
can
excess
even use it through the ATM.
Okay.
Okay, you put in your ATM card and want to withdraw, and it is going beyond 25,000. It will pull the money from there and give you. So for you, it is completely transparent.
Sorry, you were asking.
What is the primary aim of the bank for introducing a product like this from a bank's perspective? Because we definitely have the sweep out facilities where customers generally have the liberty to choose between which of the term deposit products tenors do they go for. In this case, it's fixed, if I understand that correctly. But from the bank's side, is it so that the bank is looking at newer account openings really, new to Kotak Bank sort of customers through this? Because the smart ones within your system have moved out to better yielding products or whatever. I mean,
Shall I take that?
So is it that, or is it so that even within your system there might be some
Okay. Yeah.
how is it tell us that 34%, what does that 34% stand at your end really, and what sort of
Sure.
what's in it for the bank there?
So let me first start by saying that we want to do what is right for consumer, and this idea comes from the fact that there's an opportunity to give to every consumer the ability to earn higher interest while maintaining the liquidity of a savings account. So that's the starting point. First, keeping the consumer at the heart of thinking of this is the first thing. What is in it for the bank? We have a 2% share in the SA book. We want to get higher amount of low cost deposits. That is what that is the way we want to build. That's been our stated strategy, that we want to acquire more low cost deposits. So this helps us get more consumers from other banks or from other places where they've kind of kept their money which is lying idle, and they can put into this savings account and earn higher interest rates. That is the strategy. How can we acquire more consumers from other banks, and consumers having money with them which is not being used right now, but they want to keep it as reserve cash for any emergency, so that we can actually increase our low cost deposit base.
And any targets around that? Maybe through what sort of deposit accretion do you see, or newer customers which you see coming into Kotak Mahindra Bank?
I think we have targets, but those are internal.
So they are pretty aggressive at that kind.
It's a very important launch for us. We're actually going above the line communication after long with this product. So next week you will see communication breaking above the line on this, and that is the importance of this product in our strategy of acquiring low cost deposits.
And given this aggressiveness, where does it leave your cost of funds to at basically? Because you will be bearing more cost for the same uptake. Of course, you have had a drain of money, but still you will be bearing more. What does it do to the NIMs which were industry leading in the last quarter?
Yeah. So first to the first question which he answered. The other important thing is that today, within the savings account customers, one would usually have 2 or 3 bank accounts, and he is using one as his primary account, and the others are secondary, where the money is parked. Through this product, perhaps our ambition is, and what logically will happen is that rather than leaving the money there, I'll bring it here and keep it so that I earn. So in that process, I've got the deposits. Okay, so that is one part of it, and that's one area. Apart from the new customers, today with this kind of thing, we'll be able to get significant amount of new customers who would start looking at us from a savings product point of view, or even a business customers from a current account point of view. To answer your question, our internal maths is that okay, the incremental Ka and Sa that we will get through this product will more or less cover for the incremental cost that I will have to pay. That's the internal math. But there could be some slight increase in the margin. But that again, when you get new customers, you have the opportunity to do many other products to cross sell. Okay. Today, he means by virtue of being my bank customer, I will be able to sell him either a loans or any investment product. So that's an added thing which we are looking at when you get new customers into the bank.
Just to get it correct, so you're saying that okay, it will help margins through cross-sell.
That
maybe
it will support my coverage in case if we fall. At this stage, as I said, my maths is based on that the new customers and the new CASA that will come into the system, into my system, will cover for the incremental cost that I have to pay.
the motive for the current account and the motive for this saving account are slightly different. So you'll have to craft something different in terms of strategy for current account people to get into this market.
Look, honestly, if you ask me, for current account, it's a relatively easy thing. Okay, where I will say that current account पे interest देगा, which is means, and you do it in the what you call typical current account markets. Perhaps the news spreads, and we will do obviously some kind of a marketing strategy where we will let them know also about it. So we will target those kind of say the Kalba Devis of the and Crawford markets of the world to really get those customers.
The volumes, they will be much bigger.
That's right.
And
Yeah. So every city has got those kind of. Means Bangalore, I will do this in Majestic. Calcutta, I have a market. I'll do Paris Corner in Chennai. So all those typical current account markets, yes, we will do that.
Any other questions? Anyone who's online? Does anyone have a question?
The current split of car and SAR in terms of percentage for
Means-
deposits?
At a consumer bank?
No, at total
120 lakh.
bank level, if you
At
ask
the
me.
31st March we can give.
No, so
One
no, he
twenty,
wants percentage. So
40
I'm
is
just doing a
current
mental math on that. Just a minute. Give me a minute.
30% is car and 70% is
No, but he's talking deposits including
TD.
Including TD.
So there'll be 280 and 40. 320. So 15%, 15%.
So around anywhere between 12 to 15% is current account. Close to around 33-35% is SA.
And the remaining is TD.
TD. So it will not be very different from what the industry is. Okay, 15, 35, 50. That's a kind of yeah, correct.
Friends, if you don't have any questions, we'll just, I'll say thank you so much. Mr. Rohit, Bhasin and Virat Diwanji are going to be around for, if you want to ask some questions on the sideline, please. Mr. Virat Diwanji, as you know, is Group President and Head of Consumer Bank. So feel free to ask.
So we can have a small interaction also.
Of course you can have, sir.
Any questions
You
online?
like.
Online, anyone?
Online, anybody has a question? Kamakshi, anybody has said something on the chat? Thank you so much. And sorry for the initial technical glitch and the little delayed, working lunch.
Thank you guys. Thank you so much.
Yeah, so we will take this call.
I just